Good morning, hello, welcome along to our daily live stream. Hope you're doing well, and welcome to the start of the London session. Different flavour of news, I would say, overnight from what we had yesterday. Very much yesterday focused on oil and Japan. We've got some good bits of news out of Japan as well, but definitely today we start our ramping up into the jobs data, because we've got the JOLTS job openings that will be happening today. We've got GFK in Europe, which has happened. I'm going to touch on that as well, and then we'll have a quick look at one or two markets along the way as well. Hope you're doing well. Thank you for coming and joining us, and a few people have been getting involved in our Fundamentals Week, which is obviously our focus for all of our attention here at FTUK over the course of the week, and it's a good thing as well, which is really, really nice to see people getting involved in the squawk, and it can really help you. All of this with Fundamentals is all about practice. Take it nice and steady, just have it in the background, and very slowly you'll start to see the market reacting to some of these news moves, and then the whole sort of jigsaw piece of trading starts to make a little bit more sense. It's not just about the candles on the screen and any particular strategy that you are following. Right, okay, let's jump in straight away and run through everything that has happened overnight. The idea really behind this is always to try and be relatively efficient, because if there's not much going on, there's not much going on. But that's the thing, the market doesn't wait for you. You've got to be ready. So when it's very, very busy, you've got to be able to cope with the torrent of stuff that is coming towards you. And if it's very, very quiet, that is fine as well. You've got to be able to take that in your stride as well. So let's jump straight in. Let's see what we've got for today. So a little bit of a catch up in the Middle East, and that's possibly why we have a slight bottoming in crude oil. But when you're 7% down on a session for one day, I think that's the biggest move down in 2 years, I think it is, something like that. Then, you know, some sort of a bottoming out and a move back in the other direction is obviously way overdue, because markets tend to overextend themselves a little bit. Yes, in the Middle East, negotiations are underway between Israel and Lebanon. They are to reach an agreement to end the war. US envoy reached good understandings during his recent visit to Lebanon. Now, let's just check on that crude oil market. You can see it there. Big shift down, top to toe. We were looking at just under 7% yesterday in total from Friday's close. So yeah, massive move. Now this is where, when we get any dialogue around peace talks and stuff like that, that's where you can get something that just gives us a relief rally in the other direction. So if you are trading energy products today, you have to be very, very sensitive. Get yourself one of the 14-day trials of the Newsquawk audio feed, and just have it on in the background just in case, because if it really starts to move, then it would pick up, and we're quite extended now to the downside. I think we're going to go lower ultimately, but you know, markets never move in a straight line, as I'm sure everyone's just figured out by now. If you haven't, you'll soon learn, that's for sure. Okay, right, that's crude oil. Let's move on and talk about Japan. Usually you get quite a lot of information when you wake up here in the UK. You usually do get quite a lot of information out of Japan. They're quite talkative, and that's a good thing, because you really do need a lot of information to be able to then filter it and then pull out the salient bits. That's the communication is very important in Japan. I think that's the Democratic People's Party. Tamaki said overnight that they haven't heard from the LDP about a partial coalition. They won't join the LDP. Komoto's ruling coalition. The Bank of Japan should not rapidly change policy at the moment, with real wages still at a standstill. So anything to do with political turmoil now in Japan is not a good thing. We're not used to it, that's for sure. So the election over the weekend has not done us any favors. That's going to increase volatility, and you'll know exactly how sensitive the Japanese can be to volatility on the next slide. From NHK, Japan Komoto party leader is set to step down as well. Now, if you were in markets a few years ago, quite a long time ago, I remember when the Greek crisis happened, and they were literally changing political parties and governments and leaders at the top on what felt like on a daily basis, almost, to a certain degree. And we've had a little bit of that in the UK in recent times as well, where we've had one leader after another after another. You don't want that sort of situation in Japan. Given the weight of the economy, given its importance on the global stage, given its positioning in terms of how much debt it carries, Japan has been a huge investor in government debt over the past God knows how many decades. So it's a little bit more serious when it gets to that type of stage. Now, this is the important bit. The Japanese have a tendency to intervene in their currency. It can be a profitable trading strategy, and if you want to make fast money in markets, then trading central bank interventions is one of the fastest ways of doing it, but the difficulty is timing. I mean, it really is incredibly. It's a little bit of a potluck guess, but you can, opportunity does favor the people that are planned, so you can put yourself across these things quite nicely. Now, this is out from the finance minister, Kato, overnight. No comment on FX levels. Well, they never comment on FX levels, obviously. They are closely watching FX moves. That is a standard type of Japanese phrase. That includes those driven by speculators with a higher sense of vigilancy. It's important to comply a meaningful economic package. Now, I would say highest sense of vigilance is possibly as high as it goes in terms of if there's a risk of intervention. Now, if they do intervene, what you've got to understand is the reasons behind it, and you've also got to understand what sparks the intervention off. Most people think that it is the price, and it's usually not the price. Let's just have a look at the yen. We sort of just pretty much started to form what looks like quite a clean looking symmetrical triangle. Let's just paint that in actually on the charts. This is on a 1 hour time frame now. I'll just take off my magnet. Just paint. It's starting to look a little bit like a symmetrical triangle. Obviously, study Edwards and McGee, the best technical analysis book ever written. And symmetrical triangles are really not to do with the shape of the triangle. It's to do with the angle from here on this leg, this here, the angle. Oops. If you want to get really into your technical analysis, then your symmetrical triangle is the relationship between these two legs of the triangle. It's these angles. It's the symmetry in those angles that defines the symmetrical triangle, not the shape. Now, there's not a great many traders will be able to recognize those kinds of traits. That's why you should study Edwards and McGee. It's absolutely the most amazing technical analysis book. But it looks like a symmetrical triangle, and that in itself is indecision. Symmetrical triangles are particularly difficult patterns to work with, but it's looking like it can certainly extend into a pennant as well. I would say that we're going to be looking to the upside of this market towards the end of the week, but there's certainly no reason we can't get some sort of a ragged breakdown of the pattern before we get a trending move. So that is one to keep an eye on. Now, what you've got to remember about, let me just remove these drawings. What you've got to remember about the yen is in Japan, what they don't like is they don't like a market that's moving too far too quickly. That's the thing that they really don't like. So that's what you've got to always pay attention to. We just remove these lines as well. If you go to a daily now, this is how you can start to get a handle on that as a trader. What you've got to do is think to yourself, okay, how far has the yen moved? And remember, these are huge currencies. You've got the dollar against the Japanese yen. It's absolutely ginormous. The impact of the exchange rate on business and commerce and all of these global entities, from the debt markets, from the money markets, into big companies and industrial companies, selling stuff around the world, repatriating funds, moving funds around the world. The exchange rate is so important to the way that they do business. So what that means is it means that you've got to have a relative sense of stability in the exchange rate. So what they don't like in Japan is moving too far too quickly. Why? Because the economy can't cope with it. So as a trader, if you want to get an idea of what that looks like, let's just scoot out a little bit. So I just undo my daily time frame here. Look how progressive our market was there. Relatively range bounds. They love that. Absolutely love that. Why? Because we're in a relatively narrow range for an extended period of time. But look at this though. since October 2022. I mean, this was the interest rate hiking cycle the Federal Reserve started to go on. You've got that sense of normalization starting to come in now from the Japanese as well. But look at the way that volatility has now increased. It's a lot more volatile. So what they don't like is going too far too quickly. That is what is going to spark the intervention risk rather than the price itself on its own. So you always got to remember that. Now, what you got to do is look at the bottom here. So we were at 139.64 on the 16th of September, which is only, well, sort of, 6 weeks away, 6 weeks ago. So in 6 weeks, the whole of the Japanese industry of commerce and industry and companies and stuff has to be able to factor in an exchange rate between 139 to 153. That's quite a lot. So if you imagine that, if you look at this trajectory that you've got in the Japanese yen now, if you imagine you project that forward, what you could basically say is that if we were to carry on with the same performance from where we are right now, you could be ending up with a Japanese yen by Christmas that is 167. That's what they don't like. So that's where they then look at it and they then say, okay, we need to come in here and intervene. And what that's going to look like, if they did, obviously when this chart is going in the upward direction, the Japanese yen is getting weaker and the dollar is getting stronger. And the US election could certainly give us that kind of volatility. So what they would do is they would strengthen the yen. They would start buying yen, which would mean the dollar yen would start pushing to the downside. That's the key point. So if you're going to get an intervention trade, then it's going to be to the downside. Now, whether that's going to be from here, I don't know. As I said yesterday in the stream, this is such a super important critical level in the Japanese yen, and we've on the daily, you can see we've held it very, very nicely. So it's going to take some energy to get us below there now. I think now the intervention could certainly do that. It's going to be a lot stronger if it's a coordinated intervention as well. That's basically if the Bank of Japan and then they enlist the help of the ECB and then also the Bank of England and the Bank of Canada and the Federal Reserve. They all group together and they all start buying yen, and that moves the exchange rate. And it will happen over very, very, very quickly. It'll happen over a few hours, over a day at the most. And then that's it. You've got a repriced exchange market. Now, I think I'd have to go back historically and look at when the last ones were. I think that's possibly one there maybe it wasn't in April. It was probably this one back here. I think that was one there. I can't remember. You'd be able to look these things up online, but go back and look historically where they do those kinds of moves. So yeah, just pay attention to that. And you can set yourself up with sell stop orders underneath various levels if you wanted to do that, but it's still not an easy game to try and play. And ultimately, in the long run, it's not a great way of trying to be a successful trader for sure. But you've always got to just remember that with the Japanese yen. Gosh, I could just talk about this stuff all day. I absolutely love it. Let's move on and let's talk about one or two other things as well, because there's lots of other stuff going on. I'm going to tidy this up as well. I said yesterday that Tiff Macklin from the Bank of Canada, he'll be talking all week. Now, usually the narrative that these guys say when they're on the calendar every day, it's usually something similar. They usually don't vary too much. So we've got a little snippet of it here. I can't think that's going to change too much, but basically yesterday he said productivity is key to raising living standards in Canada. Going to discover where neutral is. Broad direction of rates is down. However, the pace is less clear. Now, I don't have much of a view at the moment on the Canadian economy, really just from the fact that you can't cover everything as a trader. It's not that easy to do. But certainly, there are opportunities in there. If you look at the Canadian dollar as well, I have been following the price action on the Canadian dollar. And if you want to do some deep research into the economy, then that would not be a waste of your time. But you can see really... Look at that. I mean, since 2022, October 2022, we're pretty much sort of trapped in this range. We're at the upper end of it as well. But, this is a market that's due for a decent break. Now, given the connectivity between Canada, the Canadian dollar, and obviously the crude oil market, then, anything to do with the Middle East could essentially give us some sort of a change in texture in the Canadian dollar. But I think it's due, but it's not something that I am following too closely at the moment. Next up, let's move on and let's talk about the United Kingdom. Obviously, we're going to have the budget tomorrow. I'm going to cover that in a little bit more detail in tomorrow's session as well. Put some game plans around it of what we might expect. But this is out this morning here. Quite interesting as well from the British Retail Consortium, the October shop price index that's been printed over the last few hours and was slightly worse than expected, minus 0.8 on the year-on-year. That's the measurement from one 12-month period to another, versus what the consensus was. The forecast was minus 0.5%. And they've said, they usually put some information out when they release the data as well. Shop prices fell faster, but retailers warn of risks in the budget. Households will welcome continued easing of price inflation. This downward trajectory is vulnerable to ongoing geopolitical tensions. Okay, well, we'll see what happens with the budget tomorrow, and I will put some more detail around that. The pound is looking a little bit peaky this morning, which is good to see. I am bullish overall on the pound in the long term. So, yeah, any upward movement on the pound is welcome, but I'm not looking for a big flash to the downside tomorrow, that's for sure. That will be a little bit painful because I've got skin in the game on that one. Okay, let's talk about this one as well. This is out from the Times as well, and also Sky as well. Bit of context for the budget for tomorrow as well. The minimum wage is set to increase by 6% in the UK budget. Well, that's interesting considering they're going to increase taxes. And they said quite clearly that it was going to be a painful budget. They're going to increase taxes. So, yeah, wonderful to get a minimum wage in one direction and then they take it out your other pocket in the other direction. I mean, well, yeah, that's not really going to do very much, is it? The UK Chancellor as well, Rachel Reeves as well, quoted on Sky saying the UK budget will give the NHS a huge boost and will receive £1.5 billion sterling next year. Obviously, the NHS here in the UK is a very political hot potato, as always. Now, let's move on and let's talk about the United States. A little bit more news as we move into the job cycle this week. This from President Biden as well, delivering a speech on investing in America. The agenda is set to be released at 1400 Eastern Standard Time today. Now, these sorts of things, can they move the market? Yes, they can. They really can. They certainly can move the market. Is it going to? I mean, I don't think so, not given with the fact that the market is just totally focused on next week, and he obviously will be the outgoing president. But, you just note that there is a political speech from the President of the United States at 2 o'clock Eastern Time. So, if he did say something outlandish, then that could give us some sort of volatility in the indices markets, in the dollar, something like that. Nate Silver as well forecast the election vote for Trump to be 271 versus Harris's 267. Chance of winning for Trump is 55% versus Harris's 45%. Now, I think the thing with the election, I'm going to put together something towards the end of the week as well, but the overall view is the thing that the market is not considering is if you get an election result which is incredibly close, if it comes to a situation where it's contested, then that contesting can give us a very indecisive market, that could last. So what I'm trying to say is you don't get a firm result on a leader there and then on the night. And if you don't get that and it gets extended and then you get court cases and recounts and stuff like that, it can cause a lot of extra problems. So that is something to just bear in mind. I think Trump is going to get it, but there's no question you can't rule out a Harris victory, and that is the element that the market is not priced for properly. I wouldn't have said at the moment. And as I said yesterday, this is a US 10-year interest rate market, and it's also a dollar play rather than just focusing on getting long or getting short the S&P 500. But yeah, like I said, we will do some more on that over the course of the week. Also, as well, in the United States, Goldman's CEO as well said that the US economy is incredibly resilient. Well, it certainly seems to have weathered well since COVID, that's for sure. Has concerns about global inflation. Yes, I suspect that we have not seen the back of inflation. These things, they never just are done and dusted. Spending and deficits, best to focus on long-term US rates. Okay, fair enough. And also as well, this from Goldman as well, they warned about a possible overnight lending rate spike due to the record deluge in treasuries. Now, we'll go into that. In fact, let's have a quick look at that while we're here. because I do want to talk about this in more detail, because so many retail traders are not into the interest rates, and it's a shame. You know, I'm not going to bang on about it too much, but all of these markets, they do revolve around bonds and interest rates, and that's the US 10-year, which is the benchmark government bond in the that we have in the world, and you can see that journey that it's been on. That is your Trump trade. That's basically what it is. That's basically saying is it's saying that if Trump gets into power, he's inflationary. He's going to put tariffs on trade. He's going to clamp down more on immigration, which means wage hikes, because you haven't got as many people to work at those lower ends of the economy as well. So wages have to go up to attract workers and stuff like that. That's all inflationary. So Trump is your inflation president. Now it sounds like very binary and very black and white, but that's the way that markets view things. And that's what you can see there in the 10-year. The price of that bond has to move down. Now, why is that price of bond have to move down? It's because if you're going to go into an environment of inflation, if you are going to invest in a bond, you're not going to do it unless you can get the bond on the cheap. Why? Because by the time you get your money out the other end, you're not going to get in return on your money. Inflation will have after 10 years, that inflation will have eaten any return you're going to get. So the market has to give investors a better deal to compensate for the inflation. So what you're looking at there is the anticipation of inflation. This is a daily time frame. That's the market to have your eye on as we go into the election next week. Absolutely critical, really, really important. And obviously the dollar is a component of that as well. So the US 10-year, if you want to see that in your trading view, just type in US 10. I think this is the TVC one, I think. Let me just bring it up on here so if I can find it. US 10, yeah, so that's you can see it on my screen there. So just type in US 10, look at bonds, and you'll see it there. TVC, United States 10-year government bonds, and just track the price of it. Obviously, the yield is a component of that, but like I say, bonds are fascinating. It's such a shame that more retail traders don't get into it, but it is a super cool market. Okay, so that is the United States, and then finally, let's just look very briefly at what is on the calendar for today. Oh, sorry, I got the wrong date on from there, haven't I? Let me just better remove that. There we go. So yes, more active today. We've had the GfK consumer confidence data out of Germany. That came in slightly better than expected, minus 18.3 from the previous minus 21. We were forecast at minus 20.5. And what you can always do is, like I said in yesterday's live stream, go to the chart and look at how the euro reacted. Germany, obviously the leading economy in Europe, struggled. We've had sort of periods of people saying that we're on the edges of recession in Germany. Not fared well from a growth point of view since COVID-19. Certainly not as strong as we have been historically in Germany. Now, if you look at where that data was printed, because that's already come out already. Let me just go over to the euro dollar. Just take it down to a 15-minute chart and look at the market reaction, and you'll see the volatility. And that's where you learn fundamentals from. There, you can see it there. So it's this. I think it was around sort of 7 o'clock this morning. So that's on a 15-minute time frame. There's not a lot in it, but you can see it here. So that's where we connect market information with market reaction. That's how you learn fundamentals. It's dead easy, and all you need to do is care enough to pay attention. That's it. Dead simple. So it's not really a game changer in terms of movement. And the only people that are going to be trying to make money out of that in real terms, unless the news is way out of whack, is our algorithms or high frequency traders, things like that. But yeah, that information has been produced, so that's now baked into the cake. We're going to get the consumer credit details from the Bank of England as well. If they've not been printed already, I don't think they have been. Also, mortgage approvals. Macklem will be speaking again later as well. Case and Schiller, the home price index, will be printed today, and later on we're going to have the JOLTS numbers. We are expecting a slightly more dovish number from the JOLTS. This is the Bureau of Labor Statistics. This is the job openings and labor turnover numbers. We'll talk about it in a little bit more detail in the US open stream in a few hours time, but yeah, that is expected to push to the downside. So in preparation for non-farm payrolls, it all starts today, so make sure that you are fully in the loop with that. I think that is about it. Yeah, so good session ahead, I would say, and I think it's a good week to be watching the markets. Obviously, as well, before we go as well, just make sure that you are fully aware that you can get a free trial of the Newsquawk. They are sponsoring our fundamental week here at FTUK. Use the code News35 on the checkout. You'll see it on the website on the banner at the top, and you'll get an audio squawk for 14 days. It's an amazing bit of kit, and we'll have a look in that in a little bit more detail, probably in one of tomorrow's streams as well. Depends how much there is to talk about, what's been happening overnight. And then we're also going to do an amazing prize giveaway into non-farm payrolls on Friday. Just head over to Twitter, do the retweet thing, fill in the form with your guess of what it is. You'll be in the draw, and you can win a 10k account, and then also a 3-month subscription to Newsquawk. That's a professional news tool. It's absolutely outstanding. Really, really good. So we're very grateful to them. There's loads of content coming throughout the course of the week as well. And we are also going to be posting an interview with Addon, the head market analyst as well at Newsquawk. He gave us a great podcast interview. We're going to stick that on the YouTube channel later on today, or probably tomorrow morning. So please do pay attention to the YouTube channel for that. Other than that, enjoy the session ahead, and I'll see you in a few hours' time for the US Open.